what can a buyer expect working with a lender between after the accepted offer to closing? What does that process look like?
I think one thing just to prepare buyers is if you've never been to the process, you can feel kind of like you're being, almost like your soul is being invaded.
This is an invasion alert, an invasion alert.
They want to look into where you've been living. They want to look into to verify your income. So they're going to get pretty, like I said, it can feel invasive, but you got to keep in mind they're lending you hundreds of thousands of dollars. So they just want to make sure that you're able to pay them back and then give them that interest, which is how they make their money and why they're able to make the circle go round.
Just overall doing a deeper dive on you.
Yep.
Yeah.
I think a key term is when you start looking to buy a house, you are pre-approved.
Yes.
Mm-hmm.
So you look at your application, and then after you get an accepted offer, they want to verify what you put in your application is true. Mm-hmm. And then you get final approval between accepted offer to closing. So again, pre-approved only takes about 20 to 30 minutes. And then after you get a signed offer, they're going to get up all in your business. Mm-hmm. So they're going to look at your last 2 years of tax returns officially. They'll call your boss and verify that you're working there because they don't want you to falsify any documents. But again, they're giving you hundreds of thousands of dollars. They want to make sure. There's some additional things that'll be going on that the lender will be doing in the background is they're going to be seeking final approval, which will include they'll have the underwriter look at your file, which that will also, they'll look at your tax returns, your last few months of bank statements. They want to make sure the money you bring, you have enough money for closing for your down payment, and they also want to make sure that it's verifiable where you're coming from. So here's the deal: they want to make sure that the cash you have on hand is legit and in a bank account. Mm-hmm. So a quick question: what do you do if you're getting a gift from your grandma Kay? If your grandma's going to give you a down payment, what should you do?
Oh, I think if you're going to get a gift of fun or a gift from Grandma Kay, the one thing I would do is make sure you let your lender know up front. Here's the reason why. You have to source everything, especially a large deposit. If a large deposit happens to your account, one or two things happen. One, you can't use it for whatever reason because it's large, and it cannot be sourced, meaning that it cannot be what do we call that? Money under the couch?
Well, yeah. Well,
couch
under the
money.
table, like cash.
Yeah,
cash is fine, but it has to be sourced.
Mm-hmm. So they just got to know where it came from. So if Grandma Kay is going to give you money for the closing, that's fine. In order to avoid having her submit 1,000 documents as well, gift a letter, proof of funds, little things like that will be suffice. So before you put it in your account, talk to your lender, make sure we are doing that correctly, because if not, it's going to go down the weaves, and then Grandma Kay is like, what did that lender need my bank statements for? Like, I don't need to provide that. You know what, I'm not even going to do it anymore, and then you're not in a good space anymore. So from the lending standpoint, they have to make sure they source everything.
Yeah. So what the bank will need is if you're getting a gift for your down payment, it's called a gift letter, and you need whoever's giving you that money, they just need to write a quick letter under the guidance of the loan officer what the bank requirements are, and then you deposit that way. You just do it that way. And it's good for the giver to know that you have to write that gift letter. Then secondly, it's good for the bank to know. It makes things very smooth. Otherwise, if someone gives you a gift and they don't want to write you a gift letter, it gets really dicey, and you can't, even though you have cash on hand, you can't use that towards your down payment, and you could get disqualified. So it's a little step, but it's important. If you have cash deposits, you call your lender and tell them, hey, I have a bunch of cash deposits I want to put in now. What should I do? And then your lender will guide you through that to make sure it's in compliance. We want you to do everything above board, but make sure it's in compliance. You have to understand how mortgages work is you have Freddie Mac and Fannie Mae. So what a lot of American citizens don't realize is that all mortgages are backed by the federal government, by us, taxpayers. And you have to fit universal guidelines and universal application. So if you're approved, the bank has to give you a loan. Or they should, as long as they're approved, as long as then also your bank statements back up and your tax returns back up. So they have to give it to you. So a little bit, we're getting the weeds a little bit, but you have to understand that 80% of the loan is backed by the government, and then you have to get prime mortgage insurance, which will cover the difference. If you're doing 5% down, then prime mortgage insurance will cover 15% of that loan. So it's very strict. You feel like they're all up in your business. You're not doing anything illegal. So if you work at a restaurant, you have a bunch of cash, tips, things like that. All we're saying is just have a loan officer that works hard for you, and they'll tell you exactly how to be in compliance with how you deposit things. It's as simple as that. But if you do it your own way and you don't do it by compliance, and since you're in a tight time frame from acceptance to close, that could delay closing. If you delay closing, you miss close date, you could lose the house. So that's why it's so important to work with an experienced real estate agent and loan officer who can be on top of things. So it's so important that you do that. So your first 10 days after the accepted offer is finalize which lender you're going to work with. So if you like the lender you're working with, go with them. But if you want to do any rate shopping, do that in the first 10 days. The next thing is get ready to give more personal information. So 2 years of tax returns, bank statements, get ready to do that. And then the third thing we haven't really touched on because it's more on the transaction side, you got the home inspection. So let's assume we've done deep dives on the home inspection before, but let's say the home inspection goes really well. That's usually the first 10 days of the transaction as well. So what happens after the first 10 days of the accepted offer, you lock in with your lender, things are going well. What are some final contingencies the lender's going to be doing from after the 10-day to closing? What will be going on at that point?
Making sure your insurance, you get your insurance in. I think the insurance is important. The reason why insurance is important because it changes your payment on your mortgage, which is important, and just kind of the verification of everything. Generally speaking.
Yeah, I was going to say the lender wants to verify that you are credible, but they also want to make sure that the property is credible. So they're going to make you do an appraisal as well.
I was gonna say, and then the underwriter would re-look through the appraisal too, right? Because the appraisal does it. They say yes or no if it passes, but then it also has to go through the underwriter. Is that correct?
Yep.
On most loans.
I agree with that.
So they'll look at the appraisal, then they'll also look at the title work. So the bank says, we'll give you a loan as long as there's clean and clear title so you don't inherit any liens on the property. So when that happens is you hire an attorney, or your bank hires an attorney, they do a title opinion so that all the liens get paid at closing. So you don't inherit the previous owner's lien. So if they have a lien on their property for a mortgage, well, that has to get paid off at closing. And so the seller's mortgage gets paid off, and then you get a new mortgage. That's a nice thing to your benefit, is that you don't have to inherit another person's mortgage. But 3 days prior to closing, you're going to get what's called the closing, the CD, the closing disclosure. So that's going to detail all the money you have to bring to closing. So it's got to be down to the T. So that, and then you're going to have to write a cashier's check for that amount there. And then additionally, to prepare, you need to bring your driver's license. And then there'll be a few documents you're going to sign electronically ahead of time that you need to make sure you sign. And then when you go to closing, it's only about 20 to 30 minutes. The way we describe closing is it's a summary of all the other bank disclosures you've signed throughout the process. So each step of the way, the bank will send you something, authorization. Hey, can we look at your tax returns, things like that. You sign that. Hey, you applied for a mortgage. Is that true? Then you sign that electronically. So the point is when you get to closing, you sign all the remaining closing docs. That can take anywhere from 15 to 25 minutes to sign, and then it's your house. You get the keys when you're done signing that. So it's usually at a law office, and then after you sign the final documents, it's your house. You get the keys. You brought the cash to closing, the cashier's check. It's yours, and it's simple as that. So I think it's. I know it's a little bit dry, but hopefully if you're looking to buy, this kind of gives you some guidance on what to expect when you work with a financial institution from the start of the process to closing. And each step of the way, we're here to help, and you want to have a good team working for you. And that doesn't just mean the real estate agent, but also the loan officer as well.